Welcome to the Investment Banking Leaders Podcast, brought to you by the Investment Banking Leaders Club, your exclusive access to the industry's most successful leaders. These experts have closed thousands of deals, generating hundreds of billions of dollars, and they're here to share their strategies, insights, and leadership lessons that can fast-track your career. But the learning doesn't stop here. Join the Investment Banking Leaders Club at ibleadersclub.com for even more exclusive insights, leadership frameworks, and career accelerating resources and events. Thanks for joining us, and best of luck on your growth journey. I have another impressive guest for you all. I'm beyond excited to be joined by Allan Bertie, who's the head of European investment banking at Raymond James here in the UK. Allan's extraordinary journey took him from Schroders to leading transformative roles in firms like DLJ, Bridgewell, Jefferies, and now Raymond James. His career has seen him work for the US, UK, Swiss, and Australian firms, providing him a truly unique perspective on the industry. And not only that, but Allan stepped out of banking for a couple of years to help build a renewable energy company, finding himself as a non-executive chairman at an incredibly young age. In his 32-year career, Allan has advised on hundreds of successful transactions across a wide range of sectors and regions. He's built and scaled businesses, built successful teams and cultures, set bold strategies, and delivered meaningful growth. So having got to know Allan, I learned he's very resilient, he's tenacious, a top relationship builder, and cares about building collegiate environments. So we couldn't be luckier to have him on the show with us today, sharing his secrets. So welcome to the Investment Banking Leaders Podcast, Allan, and thanks for joining us.
Thanks, Peter. Pleasure to be here. Look forward to our chat.
Excellent. Why don't we start just by giving our listeners a snapshot of your background? You grew up in Glasgow, trained as an accountant at KPMG, and then you embarked on this extraordinary journey I mentioned that took you from Schroders to transformative roles in firms like DLJ, Bridgewell, Jefferies, and of course now Raymond James. So can you tell us a little bit more about your story?
Sure. As you can probably tell from the accent, I'm still a proud Scot, notwithstanding the fact I left Glasgow back in 1992. Having trained as an accountant, I wanted to do something other than auditing, and a colleague had found a job with a bank down in London, and that sounded pretty interesting to me. So I organised to be transferred on a secondment with KPMG to London and used that as a platform to interview. I was incredibly fortunate because at that time, UK banking was dominated by Warburg, Schroders, Barings, Morgan Grenfell. Many of those names ceased to exist. But I was one of the first of Scottish hires into the Schroders investment banking business. That was a traditional blue-blooded British merchant bank, number one or two in the M&A league tables at the time. It was either us or Warburg's. This is before the Americans arrived. Super fortunate to have landed with a very collegiate firm who took a real pride in training their juniors. It's no secret to say that some of my close friends from those days are still close friends now. We regularly have reunion dinners catching up on what we've achieved or not achieved in the time since then. And I moved from there to DLJ, which is probably polar opposite from a traditional blue-blooded British merchant bank into a hard-charging, aggressively growing, super entrepreneurial American firm. And that's where I found what working in a really intense team environment was really like. People would work incredibly hard for each other, all driven by a drive for success, incredibly high quality bankers, some really good people. And again, it's another firm where the alumni network, notwithstanding the fact that we sold to Credit Suisse in 2000, the alumni network remains really strong and people talk about it with dewy eyes. And after that, Credit Suisse bought DLJ, and that was when the dot-com bubble evaporated and banking went from a straight bottom left to top right growth trajectory into one that was a little more challenging. Credit Suisse itself was going through a number of integrations, BZW, DLJ, Credit Suisse itself with First Boston in difficult market conditions. And it was probably fair to say it was a bit less fun than a pure growth environment that we had at DLJ. A bunch of people then left and set up a boutique called Bridgewell, and I joined them to help grow that business from a very small business into about 120 people before it was taken public and ultimately sold. I chose the IPO of that business as a time to move on and go into bigger investment banking again, which was with Dresdner Kleinwort, looking at the sponsor universe. And Dresdner was a big lender to the private equity community pre-global financial crisis, but they weren't getting any M&A revenues. So they used me and a colleague to help drive M&A revenues from the financial sponsor relationships, which was really good for the first 12 months until the global financial crisis hit and it became a bit less good. It was all about recovering money from the leveraged loans that had been issued and watching the market go through a huge period of turmoil. Commerzbank stepped in and rescued Dresdner. I hung around for a period of time as part of the investment banking team looking at the resizing of that firm. From there, brief stint at GCA before going to Macquarie, which is where I learned a lot about the infrastructure space. As you rightly mentioned, I then left banking for a period of time to get involved in an entrepreneurial area, developing solar parks in the UK. I worked with some ex-clients from Macquarie and an industrial partner to develop 3 wind parks, which we subsequently sold. It was good fun being an entrepreneur. We raised some further capital, built the team, and I became non-exec chairman, as you referred. I decided that I was too young to be non-exec. I'd rather be an exec and add more to process. So was asked by an ex-colleague if I'd be interested in going back into banking and joining him at Jefferies, which is where I spent the 5 years before joining Raymond James in 2020.
A really extraordinary journey. So thanks for sharing it, from high growth to a boutique, from bulge, working across firms from several different countries and stepping into the entrepreneurial pursuits as well. Super interesting. I know you spoke really highly of your time at DLJ and how it helped you, particularly early in your career. I know many of our audience probably only really know the views shared in the book Monkey Business by John Rolfe, which is obviously very famous. But what can you share more specifically about your time there and, more importantly, how it helped shape your career?
I think it was really an empowering place to work. If you were hardworking and talented, you were given a long way to develop your career. I effectively became head of European tech as a VP there because they didn't have anybody else to do it. I stuck my hand up, helped get stuck in and winning IPO business, which is one of the few times in my career where I've done non-M&A investment banking. I think what was clear was the leadership of the firm, from John Chelsea, the chairman, to Tony James and Joe Roby and people like that. Very clear that success was to be rewarded. Work hard, work as a team. They were very good at shutting down sort of internal politicking or backstabbing. In the review sessions were 360, fully open. The book portrayed life as an analyst at DLJ, which in those times was pretty tough. People were working extremely long hours, but it wasn't just the analysts. The associates, the VPs, the directors, the MDs were all working really long hours to produce really stellar outcomes for our clients. I was very fortunate to get a degree of mentorship from Tony James, and that's one of the things that also stuck with me over my time. His attention to the detail of people, whilst being the leader of a very successful and fast-growing firm, was really impressive. Plus, you just needed to put in one call and the team would unite to try and help you win business. Really something that you don't see that often these days.
Love that. And I can understand why that was a great experience. You touched on the empowerment, opportunities, rewarding success. You obviously had the opportunity to run tech earlier stage of your career, which I imagine was a great challenge and a lot of fun. And as you say, attention to the team and really leaning into the team are all really important lessons. And I know you've taken that on from our discussions too. And I don't speak to that many heads of European investment banking that have stepped out and done the entrepreneurial stint like yourself. So I'd be remiss of me not to talk a little bit about that. So you launched and scaled the firm, as you said. What inspired you to step into entrepreneurship? And I guess more importantly, what lessons did you then carry back into investment banking when you returned?
I think having been through a number of investment banking cycles and seen changes of investment banking strategy led by different owners, in particular deciding to refocus their business away from what I was looking at, I decided to see if there's another way of deploying my skills in execution, in leadership, and so on. Clients suggested that maybe we team up and do this development of some solar parks. It was really quite interesting. They were good at what they were doing, which was how to install a solar park, how to get the planning, how to get the grid connection, all of that. And I was good at running process and negotiating terms, negotiating PPAs. And so sitting in the chair as a principal and negotiating on your own behalf rather than a client's, you really focus very deep into what matters to the shareholders of the business, not just how to get your deal done as maybe a banker does. And that's probably something that I took back into banking. I also found, having stepped up to non-exec chairman, I felt I was only using 10-15% of my skill set. So wanting to utilize the rest of that, getting back into banking, was important to me. But also now being able to empathize with CEOs and chairmen about what we're doing to their business when they're advising on it. I think it was clear on one or two transactions where we prevailed in a pitch process, showing interest in understanding what the CEO or the shareholders were looking at beyond just the money. Every bank goes in and says, I can sell your business for the most money. Actually, what often matters is it the legacy of the CEO? Is it the family founders retaining the name above the door for a period of time? It's having that empathy and understanding what will get you aligned with your client is very important.
That's great. I can see why that's so impactful. And it's funny because we hear a lot from leaders about successful deal making and how it's to really put yourself in your client's shoes and understand their needs. So I guess that's exactly where you're at with that example. So thanks for sharing. And let's talk about where we are today. Raymond James, you're driving growth in Europe and the UK. What excites you most about this opportunity, and how are you shaping the team's future at the moment?
Sure. It's a good question. Raymond James, when I joined, had been going in Europe for 4 years in total, which meant we're a late arrival to Europe compared to a number of our US and international competitors. What that meant was we've got a huge amount of white space to grow into. We had some very talented bankers on the platform when I joined, and many of those are still with us and have succeeded incredibly well as we continue to grow. I think the key thing is being backed by such a high-profile, capitalized, conservatively managed US parent gives us a huge amount of stability. They're willing to invest in growth. I mean, since I've joined, we bought Junanco's consumer business. We bought Sabile, which is our private capital business here, raises funds for private equity, arranges continuation vehicles. So increasing our reach into the sectors that we cover. The other really important thing is we don't try and pretend to be all things to all people. We pick our sectors, and where we choose a sector, it's because we believe there's a good business case to be involved in that sector. And we want our bankers to be top 1, 2, or 3 in those sectors. That helps us provide really high quality advice to our clients, as is evidenced by the fact we do multiple transactions for the same private equity firms, and even following some of our companies that we've advised through 1, 2, or 3 phases of private equity ownership. That sector knowledge and depth of domain excellence is what drives success in investment banking these days.
Expertise is coming up again and again, so it's interesting to hear it from you as well. And congrats on the growth, the acquisitions you made, and again, continuing to grow the sectors where you see there's a good opportunity. Best of luck for that in the few months. Why don't we step a little bit into leadership? This is a leadership podcast, and our listeners are always interested to get your insights there. So you've described leadership to me as helping bankers to be the best versions of themselves, whether that's junior all the way up to senior MDs. So I'm keen to get your experience on what's your approach to man management, especially in the dynamic and remote environments we're in today.
Sure. I think it's important to have a recognition that one size doesn't fit all, and that's in all areas. We've got talented juniors, some of whom don't want to be MDs in investment banking. You want to get a skill set and then move on to somewhere else, whether it's being private equity or go to corporate side or actually do something completely different. Their role as an analyst in investment banking is a step in their life's journey. I think recognizing that and being flexible in helping people I encourage people to be open about, I want to go get a job in private equity. I can then help them find a job, or we can help them find a job. And then we've hopefully got a happy client who's got a very well-trained junior and a happy member of our client who thinks fondly of their time here. That builds an aura, an alumni network, which is really quite important for the long-term success of a business like ours. Some people respond better to firm direction. Some respond better to an arm around the shoulder and saying, we're all in this together. Let's see how we can change the outcomes here. And being flexible to that is important. You asked the question about today's remote environment. Old-fashioned bankers like me would always have said, you need to be in the office 5 days a week. We're 3 days in and 2 days out. Actually, I would say it's probably gravitating naturally to more like 4 and 1 these days. People that see the benefits of being in the office and learning from their peers who are sitting beside them. And as deal making picks up again, the atmosphere in the office, the buzz of getting deals done is quite attractive. But I also think the type of people that work in banking are suitably driven and motivated. It's very easy to spot if someone isn't really pulling their weight on a transaction. We all know what it takes to get a transaction done. I'm pretty flexible. I don't mind if people are sitting here, overseas, or at home, whatever. It depends on the reasons for it, but it doesn't bother me, people not being in the office. And again, having flexibility is another thing that attracts people to organizations.
That's great. Thanks for sharing. And I love your take that understand what people's goals are and then help each other with those goals versus maybe keeping it under the wraps and then you're not knowing that's what they're trying to achieve is to actually get into PE. So I love that take, and honesty can go a long way there. And I think you're right. The flexibility is helpful. If the deals are being done well, then it shouldn't be a big driver these days. You talked a lot about building collegiate environments and how you really enjoyed that, particularly at DLJ, and you took that on and used that for your career. So can you tell us about how you build collegiate environments effectively?
If there was a secret sauce, I think everybody would be able to do it very easily. I think there are a number of key parts to it. One is mutual trust and respect, so people know everybody's going to treat each other fairly. Two is not making knee-jerk reactions. A lot of emotion gets pent up in investment banking, and deal falls over, or there's a disagreement about something. Emotion becomes important. It's being able to diffuse that and take learnings from it that helps people develop and understand how they interact with one another as they go forward. That's important. And then celebrating success, where we have a transaction that utilizes 1, 2, or 3 of our sectors, or is a great piece of transatlantic collaboration or similar. We want to shout that from the rooftops internally and say, that's what good looks like. We'd like to see more of it.
So really modeling that good behavior and celebrating the results and being a celebrating success company, that really rings true and touches a nerve for me too. So I get that. And how about the work hard, played hard ethos that you really generated again at DLJ and in the early parts of your career? So where you are today, focusing Raymond James on building careers rather than jobs. How do you foster that strong culture whilst balancing the demands of the business?
I think you've got to differentiate this from the DLJ era, where investment banking was incredibly profitable, very fast growing. There's lots of money around in the system. So when we partied, the parties were really quite memorable. There was less focus on you've got to manage costs and so on. The environment has changed a lot. The burden of regulation is increased, so the costs of regulation are higher, and the standards to which we are rightly held are higher now. So I think there's an element of people looking over the shoulder, oh, that sounded fun. Was fun. It was a set of behaviors and patterns of the time. So you've had to evolve. But I think the culture piece is investing in people's training. We have a thing called Banker U, where we have an online training program for each stage of investment bankers to continue to learn. That's been a significant investment of the firm into training, and hopefully that's recognized by the two-way contract. We pay them. We also want, it's not just a money relationship, it's got to be a trust and development. Building team spirit. Even here, we do small events in the office. We're launching things like a running club and getting people socializing, but not in a pressured environment where everybody's competitive in some way, shape, or form. But you can't say to everybody, we're going to run 10K this afternoon. Some people just don't want to do it. Some people can't do it. You've got to think of ways that balance different people's needs and be flexible about it. And also, I think having an open door policy is important. If anyone's got a concern or challenge, they can always come and see me. And it can be on the record, off the record, just test the market, test the views of things that they've seen. And often we can head off potential crises or potential difficulties in the cultural relationships in the office.
I love that. You make it sound so easy. And I heard about Banker U from Steve Hufford as well, when he was on. And I know that's a great program that's bringing a lot of benefits to the organization. Again, little events, I think you're right, finding those opportunities to connect in meaningful ways, and open door policy, I'm sure that helps as well foster that engagement that you're looking for. We talked about your insights on what you called cracking the C-suite. We have a lot of VPs listening and leaders as well. So I'd love to hear a bit more about what you can share in that area.
I think it's something you learn having been through a number of economic cycles. When you follow one cycle, behavior tends to be a particular type. Having seen sort of the evolution of investment banking from the traditional British to the aggressive American, through the dot-com crisis, then the GFC, etc. Behaviors change, but ultimately the core of what is good is people who remain true to themselves. What are their own personal values? Do you stick by them? You don't, for example, come across a CEO whose prime interest is extremely fine wines. If you only drink lager, you can't pretend to know your way around extremely fine wines. You'll be found out and the guy will think you're a jerk. You've got to stay true to your own values. You've also got to try and do something just a bit different. That doesn't mean be a maverick. That doesn't mean coming in wearing a clown costume or something like that. What it means is, instead of going in with a 50-page or 100-page deck that you've had the team working on for 3 weeks, go in with an agenda of one piece of paper and talk to those points. It shows your depth of knowledge and understanding. But also, don't just go in and talk, go in and listen. It comes back to that point I made earlier, understanding what your client really wants. The CEO of a public company probably loses sleep at night in the 3 weeks before he makes his quarterly results statement, wondering how it's going to be tested by the market. How is it going to be accepted? What's going to happen to my share price? Am I going to look stupid? Am I going to look clever? Understanding when he's worried, are there comments or perspectives you can give to reduce that? So he sees you as an ally. I'm not saying a friend, because that's a different thing. An ally, someone who thinks like him, who's got his interests at heart. That's important. Follow-up. It's very easy. Everybody comes out with a list of 10 things to do. If you do all 10, you'll probably be one of the top 5%. If you do 5 out of 10, you're probably in the top 50%, right?
Wow.
It's that diligence of follow-up and making sure you close off open items, and think about how you set up the next meeting. Don't leave and then call a month later saying it's about time we caught up. Have a thought of how you're setting up that next meeting right from the start. Well, you want to leave with him wanting that next meeting. Hey, worker.
Love that. Yeah, again, great list. So stay true to yourself, be genuine, right? I think that's the key to any relationship. Be a bit different. Again, show your knowledge through that brief agenda you mentioned. Listen, understand the client's needs. Be that ally that you mentioned, and of course, follow up. I haven't heard follow up too much actually, so I love that take, and I think you're 100% right. The more you focus on that next touch point and setting it up ahead of time and wanting the meeting, having the other side want the meeting, I think is key as well. So thanks for sharing that. Before we move on, last question in the leadership area. What do you see as the biggest opportunities for leaders today?
And I would say that probably the biggest opportunity is capitalizing on where others have failed, learning from those mistakes, offering something that's different, taking advantage of what is quite a dynamic and moving market. You've got AI coming through, you've got cyber threats that need to be dealt with, you've got new technologies, in even things like materials technology, they're changing. Stay ahead of those. If you're early on the adoption curves of those tools, techniques, or products, then you probably have got a good way of continuing to drive your business forward. And those who don't, and those who don't have a culture, and those who don't have a team spirit will tend to see life a bit more challenging, I think.
Thanks for that. And given that you've mentioned AI, I was going to move us into the industry evolution and challenges area. So AI is a good area for that, of course. We know it's a notable change in the industry. We know it's there to help automating tasks and preserving critical thinking and storytelling. But how do you see AI shaping the future of deal making, particularly?
I think it's going to be quite helpful. As I referred to, I'm a bit of a dinosaur. So when I started in banking to do a set of comps, I'd walk down the corridor to the library, either get the microfiche out or pull a hard copy of the accounts, read it, use my accounting training to pro forma the numbers and put it in an Excel, or actually it was a Lotus 123 spreadsheet. Most of the people listening to this call won't have a clue what that was. But what that meant is in a day, you could maybe do 10, 15, 20 comps. Now you've got things like Cap IQ. You've got all the other merger market, all those other products. You can download more data than you've ever needed. The skill then became turning that data into information. I think as we start to use AI, it's going to do a lot of that data interpretation for us. It is also going to enable us to do first drafts of sector papers, et cetera, et cetera. But what that then will need is people to read it, understand it. And my personal perspective is you're going to start seeing a lot more critical thinking coming back into the junior investment banking recruiting. It went from, back in the 90s, a lot of the bankers came from sort of PPE courses. Then it became science and maths. And I think we're going to start going back to critical thinking being a big part of the job of the junior bankers. And actually, it's important because as you grow in your career, understanding how to negotiate, how to position an equity story, how to get two parties around a table in agreement, all those things come from critical thinking and analysis. It's not all about the numbers in those models. I'm not trying to minimize the importance of those because they're super important, but I think that critical thinking will be the place that changes most.
Like that, and it does make sense, right, as you say. And I keep hearing stories about how, of course, AI is going to save time, but investment banking is a people business, and ultimately you're the advisor that they want your brain more than anything. So hopefully,
we used to work on one deal at a time because that was all you could cope with. You're now working on 4 deals. It's somewhere between 3 and 5 deals at any one time. So your skill set is very different. You've got to multitask and handle and prioritize and work out what really matters.
And I know you had some really interesting takes on the PE world. You've seen some significant changes within private equity, particularly with generational shifts and increased regulation. How have you seen these dynamics evolve? What do they mean for mid-market banking?
I think what we've seen is we've come to the end of what was a pretty long bull run. Debt was really cheap, therefore equity was relatively cheap. Markets were continuing to go from bottom left to top right. So you bought a business, held it for 3 years, and by and large, you'd have made a return. Not necessarily a stellar return, but you made a return. Post-COVID, businesses took a hit in performance. We've seen interest rates going up and changing the pricing models of that debt and equity. And that's kind of caused a bit of generational change. So you've seen people who've been leading firms for 10, 15, 20 years now exiting stage left, and the next generation of partners coming through to run those firms. What you will see, I think, is broadly consistent investment policy, but there will be deals where people are trying to demonstrate that their imprimatur is on this new strategy. What does it mean for mid-market banking? I think you've got to look at it in the context of what became quite a tough fundraising market. So the funds that were getting raised over the last 12, 18, 24 months have been raised by people who have got a tremendously strong investment track record. They've got something that is a bit different. Being a generic Me Too UK or French or German fund just doesn't grow. In the same way that we go into sector specialisms, what you find is a lot of the sponsors are either going into one or two sectors, or where they're multiple sectors, they're still going very deep in sector focus on micro subsectors where they can make a difference, and they've got the investment committee's support for these investment theses. So it means that in some sectors, you don't have a lot of competition. In some sectors, fast-growing, highly cash-generative, you've got a lot of competition. And the good news for investment bankers is that private equity has to do deals, both buy and sell, to continue to survive. And it's a huge part of the M&A market. So it's good news for us as investment bankers, but we've got to recognize that we're servicing the needs of those clients with that sector expertise.
And does it mean there's a shift for you in terms of how you approach deals and the creativity needed to get deals done?
Yeah, that's a fair observation. I think over the last 18 months, you've seen a lot more structure and creativity getting put into deals, whether there's an earn-out, whether there's a different form of rollover, whether there's more structure coming into the terms of the payments. Also, you've seen just an elongation in the deal cycles as there's more regulatory focus on clearances, whether it's foreign direct investment, whether it's merger control or whatever. So that has also got to be planned into your processes to make sure you don't run across roadblocks.
Really interesting take, and the generational shifts you mentioned and the change in the industry as a whole is definitely going to challenge many of us. So thanks for sharing. I know you've been through down markets and tough deals. You talked about that at the top with the introduction. And what role do resilience and tenacity really play in navigating these challenges? And if you've got any stories that you could share that encapsulate this,
Sure.
That would be great to hear them.
I think you need to have both resilience and tenacity in investment banking, because even if you look at, you've got macro cycles, the GFC, the dot-com bubble, etc., they create real challenges for banks to continue to exist, particularly the GFC. But holding on tight and saying we'll get through this storm is important. The resilience, deals fall over. There's only one buyer in a transaction, but there could have been 10 people in the running for it. So 9 people are going to be disappointed. It's understanding that's not the end of the world. If you lose or something falls over, understand what happened. What could you do differently other than just pay a bit more money to win the auction? What tactics could have been used? What learning lessons? Other people we could have called, should have called, or played certain roles differently. It shouldn't be a post-mortem where you're trying to penalize failure. It's a review of a situation, understanding what you can learn from it. And I think that resonates particularly well with today's juniors, where everything is a learning experience. People think they work twice as hard when they're just doing pitch decks than they are when they're putting the same hours in on a live deal. Because there's the adrenaline of working on a deal, there's the excitement of, I'm going to get a nice tombstone from my friend Peter on my desk. If I do this deal, it fell over, my world has ended. Well, actually, no. What went wrong? What could be done differently? How could we have played it differently and learn from that? And that happens at all levels, from an analyst, associate, VP, director, MD, head of banks. working out what can be done different. What are the learning facts? We'd rather not fail to get something across the line, but when we don't, what can we learn from it? And that tenacity, then in a particular transaction, you may face 3 or 4 or 5 things that could potentially create the transaction. How do you work your way through it? I've got one particular transaction. I won't give the company names away. And that's one of the tests for the listeners if they can work it out. In a former role, I was then selling an international healthcare business based in India. It was partly owned by a large US private equity firm, partly owned by the Indian family who'd set it up. And we were selling it to the Chinese buyer. You had a fundamental, you wouldn't call it distrust, but an alignment of views on what it took to get a deal done between the Americans and the Chinese. Do we need a good faith bond? Do we need a trust deposit? Or if they ask me for a good faith bond, they don't like me. So you've got two holding roots. How do you work your way through that? You've got paternalistic view of the original owners. My father set this business up and we need to look after our people. Everyone else is a capitalist. They'll destroy the business. Etc. How do you get those aligned? Eventually, we got to a point where deal got announced and everybody's happy. Have to wait for clearances. Then there is a border war between China and India. Not firing bullets or dropping bombs, but throwing stones and sticks at the border. They refuse to approve deals. So it's very hard for us to influence geopolitics, but you have to keep the deal alive because you run up against long stop dates, you run up about financing challenges. So you've got to stay on top of it and see what you can do. And in the end, it was about 14, 15 months after signing, we eventually got the deal closed and everybody was happy and it's been a pretty solid deal. So you had cultural differences, you had stylistic differences, and you had geopolitics playing into it that you had to deal with. I learned more on that transaction than I probably learned in the prior 10 or 15 years about this whole getting people to consensus, understanding what people need, what people's true needs were versus what they were asking for.
What a great example. So thanks for sharing that. It definitely helps me connect with it. Again, as you say, across all those 3 challenges, it must have been a special one to get done and celebrate. I want to just sit back on what you said about reflecting and learning from deals. So do you have a set process in place for that? Is it you pulling the deal team together for a period to analyze the deal after it's been done? How do you go about that?
I don't do enough of that. I tend to do it on the larger deals, but I think most of the deal teams will do a post-transaction review with the team. What did you do well? What did you do wrong? Anything I could improve? One of the things I do is call our clients after a deal and say, for a sample of our transactions, how did that go? How was the team? What could we do differently? What would you like to have seen different or better? This isn't to give me a stick to beat someone with and say, that was rubbish, you could have done better. It's more a case of, you did a great job getting that across the line. However, next time, let's think about this because our competitors will be. We've got to be seen to be evolving.
I'm sure it goes a long way with the client as well, knowing that you care enough, right, to pick up the phone and speak it through and try and improve as well going forward. So I love that. Thanks for the insight. Really helpful. What would you say has been your highlight?
I think the opportunities that the career offers in terms of global travel. I've done deals in South Africa, in Australia, in Asia, Europe, and the US. So that's relatively unique. It's also the people you meet. So both other bankers who very often that can be quite a confrontational relationship at some points, but actually building that network and getting to know them. But also some fantastic entrepreneurs and very fantastic people, as well as some not so fantastic people that you learn how you'd like to interact with them or more or less over time. And it is really that the highlight is it's a constantly a learning opportunity, this job. Every day you're meeting clients who've got a different perspective. They're challenging something we say or do, and learning how to meet their requirements, but also just learning from them and their experiences is really...
I can feel your enjoyment there, and I think that's great. Again, people business, right? So the more time you spend with people, the better. And the travel, as you said, I guess with your career working across so many different firms, you've had probably more of that than most. If you could go back to your start of your career, your younger self, what piece of advice would you give yourself?
I think part of it is coming back to that resilience and tenacity. Recognize that life in investment banking is a marathon, not a sprint. Something that trips you up or a couple of deals, if the market's quiet, you didn't get the deal done for a period of time, doesn't mean that investment banking is over. Just use it as the learning experience. I would say early in my career, I've had you thought, this is terrible, but I've got to start all over again. But actually you learn as much in those tough times as you do in the easy times. Plus, actually, if you spend time in a down market talking to clients about things that matter to them, they remember that because a lot of people will just retreat into their shells. If you're actually talking to them, they'll remember that when the markets pick up, and it helps your relationship. So it's a marathon, not a sprint, would be my perspective.
I love that take. You're so right, aren't you, that in the downtime, it's the learnings and the reflections that you can take through, and the relationships as well, as you mentioned. And I do hear that a lot. And the marathon, of course, not a sprint. 1 year, 2 badges, not going to make your career in banking, that's for sure. So again, thanks for sharing the insight. I want to move towards the wrap, believe it or not. I'm a big believer that leaders are readers. And I guess it doesn't have to be just books these days, right? There's podcasts and tons of other materials, but what materials have had the biggest impact on you in your career?
It's a tough question, that, because over the years you read lots and lots of things. I love reading biographies of political leaders, business leaders, military leaders, sportsmen. It's all about what made them succeed. There's no single rule that makes it work. It's a relatively recent book, but it's one that I encourage a number of our bankers to read. Is Surrounded by Idiots. Not because they are, but everybody has a particular personality type. And if someone doesn't think like you, your initial reaction is, the guy's an idiot. They might actually be way smarter than you and have got to the answer quicker. But what you've got to do, and that book helps you understand it, is put yourself in the shoes of the other person. That's a comment we've had a few times in here. See how they would think and address their concerns and questions in a way that's empathetic towards that. So you want those structural challenges or potential conflicts. It's on every airport stand as you're boarding a plane. Pretty short book, but I recommend a lot of our VPs, directors, and others read it.
I hadn't heard of that one myself, so we'll put it into the show notes, and I can understand why building that skill, and again, as you say, getting into the thought process of others can really help you. Whilst we're on that, the VPs that are listening, that are nearest, that stepping into that MD role, what's your biggest pieces of advice for them to succeed?
Listen to the team and learn from the team. Don't prejudge anything to start. I know when I joined here, I had a perspective of what I was going to do and how it was going to happen. And actually, my first day at Raymond James was the day the UK went into lockdown. So I actually didn't get to meet the teams for quite a period of time. But what I did was have Zoom calls with all of them. And what that also meant was you formed a relatively quick view of people's, the drivers of individuals, how they ticked. But you don't get the full picture of that till you meet. It did force me to not just come in and say, this is the way it's going to be. Let's understand what everybody's doing. What are the good bits? What are the bad bits? How do we get people aligned rather than conflicting? Putting that sort of piece together. And if you're a VP looking to step up, and you've gone from being the guy who's told what to do to the guys who are sort of helping manage all tasks on a transaction, it's understand the talents of the people, use those talents, but also use those talented individuals to teach the others in the team the skill sets that they're lacking. Because if you can build a strong team beneath you, it helps you succeed as you go forward.
Yeah, understand the talents is really key, isn't it? And then I guess if you help others share those and you strengthen the team, a mark of any good leader should be the strength of the team. So couldn't agree more with you on that. Okay, before we wrap, is there anything I haven't asked you that you'd like to share with our listeners on succeeding in the industry today?
No, I don't think so. I think we're at an interesting point in the cycle, and I think we could be at the early start of the resurrection of a bullish M&A market.
Let's hope so. I think the theme for 2025 is one of growth. There seems to be a lot of positivity. I know we're very early still for month 1, but let's hope that continues to grow. And other than that, Alan, I know how busy you are. So thank you so much for joining me and the audience today. It's been an absolute pleasure having you on the show, and I'm sure the audience will take a ton away. So thanks very much.
Thanks, Peter. Really enjoyed it.
Thanks again. This episode of the podcast was brought to you by the Investment Banking Leaders Club. And to keep leveling up your career, join the club at ibleadersclub.com for exclusive insights, leadership strategies, and career growth resources straight from the industry's top professionals. I want to say thanks to our key partner, Altrum, the global leader in financial deal gifts, awards, and recognition, for their ongoing support of our mission to empower both aspiring and senior investment banking leaders. I really hope you enjoyed today's episode. Thanks for tuning in, and until next time, best of luck on your growth journey.